Hello traders, this is Brian from FinancialTradingJournal.com. Today is November 16, 2013. Welcome back to this week's FX Weekly Analysis. If you take a look at the economic calendar this week, you'll notice several major headlines. I just handpicked a few that I think will have an impact on the markets. So on Tuesday we have German economic sentiment, which will affect the euro dollar. Wednesday we have US core CPI and core retail sales, which affects all US dollar pairs. US existing home sales, which affects all US dollar pairs. FOMC meeting minutes will affect US dollar pairs as well. BOC Governor Polo speaks, which will affect the dollar CAD. Thursday we have RBA Governor Stevens speaks, which will affect the Aussie dollar. US Philly Fed Manufacturing Index, which will affect all US dollar pairs. And Friday we have Canadian core CPI and core retail sales. Before I get on with the analysis, there's one more announcement I want to make because it's that time of year again. Due to my trading rules, I do not trade during the holiday season. Since I won't be trading, this means I won't be making my FX Weekly analysis either. The last FX Weekly analysis of 2013 will come out on Saturday, November 30th, 2013, the last day of this month. This analysis is special because the primary focus of this analysis is to summarize the events of 2013 and what to look out for in 2014. The first FX Weekly analysis in the new year 2014 will come out Saturday, January 18, 2014, which is basically the third Saturday of the month. The reason why I picked this day is because the holiday season usually spills over to the first couple weeks of January. So since the first week of January is only a half week, then I wait 2 full weeks after that, and after that you have the 18th. So this one will be a special analysis as well, since I have to recap what happened over the holiday season, e.g. for the past 6 or 7 weeks, on top of what I usually do for the FX Weekly analysis. So that one will most likely run for about 20 to 30 minutes, or even 40 minutes maybe. Probably not though. And then the one that's coming out at the end of this month will probably only focus on monthly and weekly, since that's long term, what happened in 2013 and what to look out for in 2014. Maybe I might do daily, but not really, because the focus is not on short term, it's on long term. Plus it's December, so short term analysis may not work out so well anyways. So that's it for the announcement. Let's get on with the analysis. First up we have dollar CAD monthly chart. As you can see, we are still struggling under that red downward trend line that I mentioned in the previous weeks. We tried to break above it this week. We did break above it for a short period, only to come right back down afterwards. And you can see that on the daily chart and even the weekly chart as well. You can see this little spike above. We did spike about, I believe this was about 30-40 pips above the red trend line. I thought it was going to break out, but it didn't really close above there, and it came right back down. But that just shows that the red downward trend line is still in effect, and everything I said in prior weeks still holds, because we are targeting the yellow support region right here. We did not touch that this week. As you can see, if you count, this is the daily chart, count 5 candles. Pretty much we were stuck up here. We tried to break above it several times. We tried on this day, didn't work. This day finally broke above it, but formed a pin bar / doji at the close, and then we have a following red candle. Next week going forwards, probably what's going to do is it's going to go down, test this support level, possibly bounce back up, which is what I drew on the charts last week, and then possibly test it again going up, or if it breaks the support, then it's going to head down here. So that's all I have for the dollar CAD. Up next we have Aussie dollar. Aussie dollar monthly chart, I don't really have much to say. You'll notice I removed the fib line. That's kind of no longer in effect. Just keep in mind that the 97975 is the 50% fib level. If we do go up there and we go beyond it, then I will redraw the fib level to show where the 61.8 fib level, which is pretty much near the 99-cent mark if I recall correctly, which is near parity, because that's about 100 pips right above that. So monthly chart, don't have much to say. Weekly chart, you'll notice that there is a hammer right now, pin bar, right on this yellow support. In previous weeks, I mentioned the 0.93 area would be support. That support held this week. I drew a rectangle to signify this. You'll notice from these highs here, you'll see it more clearly on the daily chart. These highs here, the lows here, bounced right off of support this week, formed a weekly pin bar, which is bullish. This is a hammer pin bar. Next week, don't be surprised if we pull back to retest support, or possibly just pull back to retest the wick, and then price action traders will be trading long on this pair moving forwards, assuming the yellow region holds. Stop losses are pretty much right below that, and sell stops are below that as well. So that's all I have for the weekly chart. Daily chart, so this is what I was talking about, the highs here for the support region, highs here, lows here, consolidation here, and the consolidation support here as well. The only problem with the bullish play is it has to break, first of all, the downward trend line. So two things can happen next week. You can either break up first, so break the trend line, and then come back down to retest support, or it can bounce down immediately, test support, and then bounce up. If it does the latter, then that poses a problem for bulls because it shows that the downward trend line is still in effect, and the break will be somewhere down there rather than up here. So it depends on the time and what happens and when it happens. So if you're trading this pair next week, be careful. Just be aware of the time-sensitive trades because depending on what happens first, that will dictate your move in the markets. So that's all I have for the Aussie dollar. Up next, we have the Euro dollar monthly chart. Monthly chart's interesting because we have a pin bar right now, although there are 2 weeks left of this month still to come. Last month we had a pin bar. This month we have a pin bar so far. We have 2 weeks left to see how this candle closes though. At this point, I have nothing to say on the monthly chart aside from the fact that we have a pin bar. So weekly chart, you'll notice I didn't really draw anything new. It's the same thing as before. You have the two trend lines. This was the downward trend line, which bounced off of it. This is the upward trend line. So last week I mentioned that this downward trend line might cause markets to bounce up slightly off of it. Plus it bounced off of the 50% fib level as well. Going forwards now, in order to the upside, this upward trend line will come into effect now because it will effectively retest the old trend line to see if it holds. Because if it holds, then it will come back down. If it breaks back inside of the upward trend line, then it will shoot right towards the old level of 1.383 or possibly even head towards 1.4, which is the upper round number, and that's where the downward monthly trend line is. But to do that, it would have to break this upward monthly trend line though. And I mean, even if it does project up there, projection levels are probably around the positive 1.39 in the middle of this trend line and this trend line, depending on when it hits up there. But those are the targets if it moves up. Otherwise, if this upward trend line holds, then targets will be down at this upward monthly trend line, which was down pretty much at the 61.8 fib level, which is at 1.316. So that's all I have for the weekly chart. Daily chart, you'll see more clearly the resistance that I'm talking about here. You'll notice that this is the yellow resistance here from these lows here, consolidation here, and what's to come in the markets to come in the coming weeks. This is also where the trend line is. So it could either just stop right here, consolidate, and then make the decision to either bounce up or bounce down. If it doesn't do that, then it could also consolidate sideways and hugging the trend line all the way up before making a decision to go down or up. It could head towards this fib level, although that doesn't really matter because we're not in that direction. But if you were to draw a fib level from this high down to the low here, we would have something that looks like this. In this case, the 50% fib level was pretty much right near the 23.6, which is why I mentioned it, because I recall that's roughly where 50% is. Because if you've been trading as long as I have, if you look at the whole length from up here to down here, this is somewhere in the middle. And then this is towards the other side, so this would be 61.8, and this area right here is the 50% region. So that's why I mentioned that fib level, but I just drew this one to show that that is indeed the 50% level. So that would be the target, which is right above the highs there as well. But we'll have to see how the daily chart closes. If you get a solid green close above the trend line and above the 50% fib level, then it could keep heading higher. But we also have the 61.8 fib level, which is also resistance up here. If you were to draw a rectangle to illustrate that, something like this, you would have that resistance, which is a minor resistance compared to this one over here that we're at right now. So that's pretty much it for the euro dollar. Lastly, we have the pound dollar. Pound dollar monthly chart, don't really have much to say. We have a green, I guess you could call that a green pin bar right now, kind of a hammer, but it's not at the bottom, it's at the top. So that doesn't really mean much considering where market is right now. So that's all I have for the monthly chart. Zooming out, we have the weekly chart. Weekly chart, nothing new. We're still ranging. Like I mentioned last week, we could be forming a range between the aqua resistance up here and aqua support down here. It could just form a range. We did briefly bounce down this week below the 1.588 level. I believe we got as low as 1.586, I believe, or 584, something like that. We did break down about 30-40 pips, but we immediately bounced right back up. Buyers were down there, and they bought it all the way up to, we're currently markets at 1.611, and that's about, from the lows, looking at about 200 pips, give or take, something like that. So that's all I have for the weekly chart. Daily chart, nothing new. As I mentioned last week, this is a possible range. It could range between here, up here between the two aqua lines, and then probably make a move in the new year. Or if it does decide to break down, then we have these yellow regions for support down here and the black lines for resistance up there. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and tune in next week for next week's FX Weekly Analysis.